Okay, let's get started from the social media viewers getting into the conversation. We will talk about oil and FX. It gets folks' attentions a lot. Everyone is keeping one permanent eye on the money. And this is from Andofa Shija at ION_DOFA on Twitter says, well, with reserves almost hitting $50 billion and oil prices above $70 per barrel, should the Central Bank of Nigeria look to further close the gap between the official rate and parallel market rate of the exchange market? That's his question, and I'm going to ask Philip Anegbe that later on the program. But keep your questions and your comments coming. We're starting today a week-long conversation around the investors and exporters window. That window was the last window that the Central Bank of Nigeria opened last year when the regulator was scrambling for solutions to one of the most intractable financial system problem Nigeria ever had since independence, FX. Let's welcome Philip from the research unit at Chapel Hill, Denham. Good morning.
Yeah, good morning. Thank you very much.
We almost all had gray hairs, isn't it? In the days of 2015, 2016 FX, isn't it? Did you?
Yeah, well, the days of 2016, 2015, we saw Nigeria suffer as a result of a sharp plunge in crude oil prices. That more or less threatened the economy, as we saw a lot of foreign portfolio investors actually leave the market. So that was really the key driver of the recession that we saw. Oil prices were low, and overall economic fundamentals were weak. And of course, the currency market suffered because oil is the largest bringer of dollar into the Nigerian economy. So we saw a fall in FX supply in the market. So there was pressure on the Naira for those periods.
What that revealed back then was that the country was slipping only on one side. Then it becomes very painful when foreign investors outflow and oil prices came down. And if I remember correctly, we came in with about $6 billion deficit.
Yeah, there was a sharp deficit in the period. I think the pattern was the fall in oil price, and that was followed by weak fundamentals with foreign portfolio investors actually leaving the market. And of course, reserve was weak in those periods because the inflow from dollar actually reduced, more or less questioning the CBN's ability to actually defend the currency in those periods. So those were the concerns at that period. So a lot of it has changed, thankfully.
Everybody wanted their money. 2 years ago, 3 years ago, almost everybody in the world wants their money out of Nigeria, and the central bank couldn't put that cash on the table.
Yeah, there was a lot of capital controls during those periods, CBN trying to actually enforce dollar demand management policies or controls, essentially. And we saw the introduction of the FX ban on 41 items, the popular one that we know now. So a lot of FX prescription during that period. So that affected the markets. A lot of foreign portfolio investors were act, so they left Nigerian markets.
Looking back at just about 3 years ago, how did you feel 1 year after?
1 year after, we've seen a positive change, and that was really kick-started by the introduction of the I&E window in April 2017. I think the circular was released on the 21st of April. Since then, we've seen a lot of pro-market activities actually take to the center stage. First, we saw improvements across the different markets. FX markets really improved because we've seen relative stability in terms of the value of the Naira over the 1 year period. In addition to that, liquidity also improved. Liquidity improved in the market because there was more supply coming in from autonomous sources. Talking about foreign portfolio investors bringing in a lot of dollars because the story of the Nigerian economy became positive following the introduction of the I&E window.
We've got a lot to talk about, so let's just get this started by bringing your first chart on screen. And this is what our viewers are looking at now. It looks really crazy.
Yeah.
And it really is crazy, isn't it?
Yeah, you look at it, it more or less shows some volatility. But it makes more sense when you take the numbers on a quarterly basis.
If it's just this is not volatility. This is crazy.
Yes.
Volatility means, well, it goes up and down. But if you look at those pillars, for those who can read very well, we look at August 2017 here, on the first volatility up. Then the second one at around September 2017. Then the highest look around December 2017. And then the rest looks very, very scary. Talk us through this.
Yeah, it tells you it's a positive look, because what it tells you is that the CBN has allowed the forces of demand and supply to actually dictate where the naira or the currency should be. And that is reflective of the volatility or the movements you've seen in the I&E turnover or window turnover, essentially. So that's broadly positive. Prior to now, we've seen the currency just stable at below at a CBN pegged rate, essentially. I think it was at 305, 315 at some point. So that more or less, we didn't see a lot of activities or trading activities go on in the FX market over that period. But with the introduction of the I&E window, you've seen the level of transactions actually improved, as evidenced by the 12% growth in FX turnover at the I&E window over Q1. So that's been pretty positive.
So on average, what you folks are looking at is that we're seeing about $225 million.
Over Q1 2018, yes.
Over Q1 2018, and that figure keeps increasing. But if we move it to the next one, and I'm interested in you explaining the next chart for us, when current account versus financial account. What do they really mean? The bars in black and the bars in... That looks a little bit like a chocolate.
That's not chocolate. It's essentially...
A bit brown.
Yeah, yeah. So essentially, the current account, what it tells you is actually the trading position of the country as a whole. It comprises the goods account, you have the services account, and of course the incomes account. So what we've seen over the last couple of quarters is that the goods account has been broadly positive. It's been increasing. Talking about exports actually outweighing imports, which is a positive trade balance for the country. And then...
And is that which of the bars?
I'm talking about the current account bars, the Dakar bar.
Yes.
The Dakar bar. We've seen improvements in, I think in Q2 and Q3. They were in Q2 and Q1, there were improvements in current accounts. Prior to that, we had some concerns before.
This is about 3 years you folks have here, isn't it?
Yes.
Between 2015 and 2017.
Yes, you know, in 2016, we saw some weaknesses. And then coming into Q1 and Q2, we saw improvements in current account positions. And that was really supported by increase in exports.